What I was focused on is markets providing opportunities over the course of a year. And 2018 was a year that volatility returned. And as long-term investors, you can use volatility to your advantage. Examples of that, at the end of the third quarter, we rebalanced early. On Christmas Eve, I know you know this because we talked about it on the show, we got very aggressive.
You never let me forget it.
I'm coming at you every day with that, Scott. So
you think the bottom's in?
No, I didn't say that. I think volatility's here to stay for a while because we're vulnerable to a lot of headlines. But I will tell you, we used as an opportunity to get long, and we're staying long, the names that we buy. It's not just selective names, it's sectors. And I'd say we have a cyclical tilt, we have a value tilt, and those have worked. Financials, energy, emerging markets.
So let me ask you this. Let me ask you a question we asked in our stock survey, which we sort of rolled out tomorrow. But since you're here, I wanted to go through it with you as well. Equities are cheap, correctly valued, or undervalued? What do you say?
Cheap.
Cheap.
Global equities are trading at 12.6 times. U.S. equities 14.1 times. If you believe that earnings are going to come in this year,
how do you know what earnings are going to be?
Which we suspect they are. Even if you take it, we're on the lower side of consensus, and even at the lower side of consensus.
Lower side of consensus?
Yeah, 4% earnings growth next year. That's our forecast.
And stocks are cheap in that environment?
Yes. Given this growth and inflation paradigm, they are cheap. If we have a higher inflation paradigm where you start to see maybe a higher growth paradigm, higher inflation paradigm, where maybe you see a more active Fed, I think we may be wrong on that. But the reality of it is we're where we are today and stocks are cheap.
Other question, how do you view the downturn? Good buying opportunity. That's clearly what you're saying.
Good buying opportunity, but expect more volatility with headlines. It all depends on how these headlines sort out.
Yeah. Doc, weigh in.
All right. I do agree. I thought that Apple was severely oversold, added to a position in Apple. Today, I'll highlight for you again, 150 calls, weeklies that expire this week, bought aggressively. 150, 250 calls, bought aggressively. Lots of buying in Apple in the short term, but it wasn't all just about Apple. To your point about, and Stephanie's about CRM, great move out of that stock. But then which is, approaching a 20% bounce from Christmas.
Amazon's had a big bounce from 1,500 to 1,650.
Right. Well, take a look at Brazil, the EWZ. This one is up from 36.5 Christmas Eve, folks, to over 41. It's pushing towards $42 a share. That's a broad market ETF for Brazil. Now, they knew that their new leader, Bolsonaro, or something like that, I believe is how his name's pronounced. They knew that he was going to be bullish for the market, Scott.
Try and do that.
But even though they knew, and Jason says I'm right, he says I'm right.
He said you're right.
He says I'm right. Nonetheless,
the power of live fact-checking, Doc.
14% rally for a broad market since Christmas Eve. So it's extremely impressive what you talked about with CRM, Salesforce. But now take a look at a broad market move like this. Today I've got 180,000 calls being bought in that ETF versus 17,000 puts. There's money that's come back in, Judge. So what I'm highlighting for you is basically risk appetite is back. In other words, they're coming for the sales forces that were down so hard.
Didn't you tell me yesterday you didn't think the bottom was in when we went around the table?
Yeah, broad market. I still think the broad market, the S&P 500, or pick the IWM or NASDAQ, could still retest or even go lower.
It's a function of
individual stocks, to your point, are cheap. And a lot of them are going a lot higher from here.
Certain names get washed out quickly. I think Facebook, John, you bought Facebook. It's up another 3% today. I think Facebook, that's a name. I wouldn't play it from the short side anymore. But I also think you have to look at two conditions that everyone was so concerned about in the last week that have healed themselves. Number one, you're seeing the high yield market. You're seeing spreads tighten there. The credit markets are acting much better. And oil is approaching $50 once again. I don't think that can be lost in the conversation.
And you have a Fed chairman that's completely pivoted on the words that he's used. And he hasn't changed his view. He still thinks the economy's strong. But he's now more willing to be data dependent. He's choosing his words more carefully.